Awesome. Okay. How's everybody doing today? We really appreciate everybody coming tonight to come see Arleen Garza. And as always, welcome to the Cash Flow Empire podcast, where everything is completely transparent and we're cutthroat, baby. We like to get straight to the point and tell you guys the truth about multifamily investing by bringing awesome speakers like Arleen herself. Arleen, how are you doing today? Thank you so much once again.
I am fantastic. Good evening, everybody. Buenas noches. Gusto de estar con ustedes. Great to be here. I strongly believe that others helped me along the way. So if I can share tidbits that will help somebody else on their real estate investing journey, I'm very happy to do it.
Nice. And obviously, we're here from limited time. So we do appreciate your time. If you want to just go ahead and get started, let us know who Arleen Garza is, where are you from, and how did you start your real estate journey?
Perfect. So I'm from a little bitty town in the western part of Texas, about 2 hours from El Paso. Grew up in a family of 10 kids. And what that taught me was a couple of things. One, you always have to save, right? That was my plan. My parents' plan B was saving. But they didn't know about investing. So I got into banking because I really wanted to be able to help people go from saving to investing. So I worked in banking for 20 years. Bank of America was my last employer. And I'm proud to say that I started Bank of America's first Hispanic marketing program ever. And I did that because, again, my mission has always been to educate people on how to grow their wealth, and investing is the way to do it. I mean, savings will help, but it's not going to double and triple your money. And so the real wealth lies in things like investing in real estate, in my case, apartments. So fast forward, I left the banking world, the corporate world, in 2007. My husband, Jacob, had a software company, actually happened to be property management software. And so he had seen what people were doing, what owners were doing in terms of returns from seeing what they did on his software. And so when he sold the business, he said, let's invest in multifamily. So here we are, 2007. What happened in 2008? A big financial crisis, right? And so there was a lot of market instability like there is today. The stock market had friends who lost 30-40% of the value of their investments from one day to the next. And I said, that's not going to be me. We were looking for a stable investment, something that would grow without the volatility, and two, that would not cost us a lot in taxes, because as we researched, we found that real estate has some excellent tax benefits. So it met the bill, but I really needed to, because my degree's in finance. I was a former lender. So I needed to get comfortable with the numbers of multifamily. How do you make money in multifamily? That was really what I wanted to know. And how do you control the growth of your investment in multifamily? So we bought a 24-unit apartment complex in San Antonio, and we did everything. I was the manager. I was the leasing agent. I did the accounting. My husband did the rehab, or managed the rehab, and managed the maintenance side of it. And it really was for two reasons. One, we didn't know any better. We thought this is how everybody did it. We were part of a real estate group that said, you got to manage your own. And so the other reason, though, is we're the kind of people that want to know everything about what it takes to run a business. My husband had run his business, et cetera, and I had a lot of great training from the corporate world. So we did it all. And then we bought more. We learned some more. We bought another one, learned more. And then in 2017, we decided to form our own management company. We had grown to a point where we could hire people. And oh my gosh, was that freedom. I no longer had to be the manager and the leasing agent and the maintenance guy. We could actually hire somebody to do that, which is one of the big things I love about multifamily is that you can scale and you can leverage other people's time and money to grow in this business. So fast forward to today, we've purchased 28 deals, about just under 5,000 doors, and about 610 million in assets. So it's been a phenomenal ride for us. But I think what has been the most impactful and the most rewarding thing for us is that along the way, we've helped 900 investors grow their wealth and save over 50 million in taxes. So those numbers are true. I know a lot of people say, whoa, is that real? I mean, I had somebody ask me that at the conference that you guys were at and I was at. I'm like, it's definitely real because it's my life. It's what I've lived.
Wow, let me just congratulate you. And, I'm sure a lot of people just want to say congratulations to you because, you come from, like we say, the raza, right? La raza, so taking action. So you guys, I'm so proud of you. I'm so happy for you guys' journey, what all that you guys accomplished until now. So, and you guys are a truly example to follow. So you guys are something that I admire a lot. I'm sure a lot of the people in this meeting, they want to be just a lot of courage to you. That's all I can say, right? So I want to be talking about, I have a question for you really, really quick, Arleen, about your journey. I mean, how hard for you guys was to, you were managing all, right, yourselves. And how hard was that transition when you start hiring people? How was that mindset at that moment?
Right. Well, there was one step in the middle. We actually went to work with a mentor, and he recommended that we try a third-party management company. We had about 500 doors at the time. So we tried that, and we hired a third-party company, and that was not a good experience for us. I will say there's a lot of great third-party management companies out there, but we just didn't happen to work with them. And so in 2017, we had 1,000 doors. And at that point, they said, that's about the right size to have a management company. So we started with two key people, an accountant and a regional manager. Now, that was what we did, though, was we actually built out the org chart as if we were a bigger company. And we said, okay, what do we need to have to run this business? And we hired the two key pieces to begin with, but then we knew we would have to hire HR and we would have to hire marketing and we'd have to hire investor relations. So we've done that. Today, we have 130 employees in our company. The bulk of them are at the properties because they all work for REEP. But the others, about 25 or so, work in our corporate office doing exactly what I just talked about: HR, accounting, investor relations, marketing. We have transactions coordinators, people that help get the deals done. So all of that has helped us scale, but it was an investment. We invested some of our returns to grow that group because it was super important to be able to build the team ahead of the growth that we knew we were going to experience.
Wow, that's totally amazing, Arleen. Thank you. First and foremost, thank you for joining us tonight. You have such an inspirational story behind you. You're the dream, right? For a lot of us Hispanic people who come here to try to work hard for what we want and the goals that we want to attain. Then you're definitely, the role model. So now that you're speaking about, building a team and kind of delegating, can you give us like the pros and cons of that? And I know that first you started off with your husband, just a small team, and now you started growing. Can you kind of give us a little bit of the challenges that came about and then the pros and cons to scaling with your team?
Sure. Well, I think the first challenge came because we were so small, right? Attracting the talent in the industry was tough at the beginning because it was basically a team of two. So when you're competing with those large management companies that have thousands and thousands of employees, but what we offered was career growth. We offered the opportunity for people to grow with us. Our employees, our team is allowed to invest with us. Now we make an exception on the minimum for them because when we bonus them, I like to tell them, pretend you never got this money and invest it, because when you double it and triple it, you're going to thank me and thank yourself for taking that step. So I think the big challenge was our size at the time. But you have to be creative, right? What can you offer that isn't size? And in today's world, even in today's world, money is not the biggest motivator. It is what is the opportunity. And we were able to really show people that they could grow with us. And that was a huge, huge piece of the pie, or a piece of the puzzle that people were looking for.
Wow, that's amazing. I mean, I know that, starting to scale and having a team just really calls for a lot of leadership, right? And when you provide that purpose for people to want to work with you is such a big thing. And then having them partner up with your company, it's just so much bigger, right? And thank you so much for that. I see that your company's name is REEP. Is that reaping the benefits, or what's behind the name?
That's so interesting because, people ask me, where did the name come from? Actually, our first office was our dining room of our house, and we were sitting around the dining room, and we were about to start the management company the second time. And we said, what is our name? What is a good name for our business? And so we came up with REEP, which stands for Real Estate Equity Partners, right? So that helped us really kind of brand that name. And it is a play on reap the rewards of investing in real estate. So good catch there.
That's wonderful. It's always good to be aware of your surroundings. So that was very good. Thank you for that.
You're welcome. One of the things you asked was some of the challenges early on. If I could add one more, vendors, right? We had flooring companies and paint contractors and all of those folks that we needed to get our units renovated. And again, we were small. So how do you convince a national company to provide you services? And it was relationships. Everything about this business is relationships. And so we were able to form really strong relationships. And I will never forget Joey with Impact Floors. He gave us an account. We didn't have to pay that day that we got the carpet or the, hardwood flooring. We didn't have to pay. He put us on an account, and I will forever be thankful to him and all the other vendors out in the real estate community that help real estate investors grow their business.
That's amazing. That's amazing. And guys, really quick, we have like about 57 people and counting in this podcast tonight. What Arleen is doing is something not a lot of people's doing what she's doing. And Arleen, just really quick to kind of elaborate what's going, the type of people and the different people we got in this group. We have some 10Xers. We obviously have some rockers. We have some people from the multifamily mindset group. And a lot of them, please guys, just let's put some fire, because what she has done in her career is very, very uncommon. Let's put some claps in the chat really quick and some fire, because it's amazing. A lot of people don't get to do this. It's very, very uncommon to do, and what she's doing, her and her family. So that's amazing. Once again, felicidades for that. It's awesome, and we just I love it. I love it so much. And for a lot of the people, another thing we like to do here in the Cash Flow Empire, we like to empower women. We love empowering women, which is why we bring a lot of women speakers to show our audience that, women can do this too. It's not only men, minorities and women can also get this done. That being said, is there any advice that you have to someone in this group tonight on where they can find their superpower. Because I know you're an asset manager. You started off in the finance game. You know, you got your degree in finance, but for somebody that maybe isn't in finance and is just trying to find their superpower on a team, is there any wise words you can give us?
Definitely. I want to just have you really look at what are the things that are your unique abilities. Make a list of all the things that you consider that you're really good at and that you like to do. Because when you have a conversation with a sponsor like me and you're asking, how can I co-sponsor with you? The first question I'm going to ask is, what value can you bring to the team? I often encourage people to do a real estate resume. It's not your typical resume, but again, what is it that you have in your background? And it doesn't have to be directly real estate that you've done, but that can translate well into the real estate business. Have that ready so that when you have these conversations, you can say, look, I am really good at underwriting, or, analysis is my game, or I'm a fantastic marketer. I could really help create nice marketing tools for our co-GP partnership or a property or whatever it is. So I would ask you to really look beyond the traditional boundaries of what you might say is in a real estate resume and say, what do I bring? What are my unique things? It might be capital raising. You guys on the call today, how many people do you know? How many people can you share your experience with about real estate investing? And I always tell people, because they'll say, well, I'm not sure. I've never capital raised. I don't really know how to do that. And I tell them the easiest way is to share what it's done for you. People want to know. You're your own testimonial. So that's one of the things I would recommend. And I would say that, growing up, I did face discrimination. I was in banking, which is a very male-dominated industry. And then real estate is a very male-dominated industry. And I can tell you at conferences, there might be 5% women, and there might be 10% minorities. But what I tell people is, I don't look at that. I want people to see me for me and what do I bring to the table. And so, for example, women, we have some awesome gut instincts when we make decisions. So that has been a super big superpower for me. When I'm looking at a transaction or I'm talking to a broker, those gut instincts kind of lead that conversation. And, our children work with us now, our young adult children. And my daughter said one day, Mom, I would hate to be across the negotiating table from you. And I said, well, why? She said, because you're so nice. They don't know what hit them until it hits them. So again, find out what you're the best at, and, use your background as an asset, not as something that is detrimental. And you can use it to build those relationships with the brokers, the lenders, everybody who plays a part in this business.
Nice. And once again, Arleen, we know we're on a time crunch tonight. Whenever we have a 10-minute window or 15-minute window, let us know, please. We know your time is very valuable and you're an extremely busy person. So if you can just kind of give us that, hey, we got about 10 minutes, that'd be amazing.
Will do. I'm having so much fun. I'm going to stay as long as I can. So.
All right, good. That's what we like to hear. We like that you're enjoying yourself, and that a lot of people are actually getting a lot of value from you. This is why we do these meets every Tuesday night, is so we can bring as much value as we can to the community. So thank you once again, John. If you want to go ahead and take it from here.
Absolutely. And if you guys have any questions, feel free to just come and ask a question to Arleen, because again, her time is really valuable. So you guys have any questions, feel free to jump any moment. We usually do this at the end, but we want to kind of mix it, our questions and you guys' question at the moment. So, but I know that you guys, as a REEP, as a company, you guys are offering something that not many people are doing right now, that is a vertical integration. You guys have your own property management company, so you guys have a true control in the deal. So that's something that not many people offer, right? So what did you guys make you like go to that point? I know that it's something that we want to be able to do that, right? But what is the point? Like, how do you guys pitch your company to the investor? I'm just wondering how you guys talk to future investors or somebody that you may just don't know too much.
Sure. Well, I think having the in-house management is a big factor. I know that investors will compare, one sponsor to another, right? And so the more you can bring to the table. Now, that doesn't mean if you don't have your own management company, you can't compete, because you can. You can compete in other ways. But for us, starting the management company was a big thing, because, you can buy the right property and all the numbers make sense, when you go to the closing table and the lender's happy. But the real magic happens after you take over that property. And the faster you can execute that rehab plan, the better you're going to be, because you're able to raise those rents from those renovated units, from painting the exterior. So people drive by your property and they want to live there, right? They're willing to pay you higher rents because you're creating value for them. So we like the fact that when we take over, day one, our website is up for that property. Our property management software is up. Literally, the sign company is waiting in the parking lot across the street from the property until we tell them they can change the signs. Our staff is trained 2 weeks before at another one of our properties. They have their uniforms. And the most important thing that happens that day is the president of our management company, REEP Residential, sits down and shares the vision for that property with every single team member. So that day they understand, what are we trying to do? What are we trying to accomplish? And the overall message is, we are trying to give people a better community to live in. Take care of the residents, and they put money in every single one of our pockets. So I think it's controlling that message. It's controlling who you hire. It's controlling how the money gets spent. We have a capital projects team that includes in-house management. We've saved $50,000, $100,000 on different projects. Those are real dollars that we can send to our investors through saving that money on our projects. So it's for us, it's a huge differentiator. But as I said, you can do it without having your own management company. You just have to pick the right partners, and you have to be a super awesome asset manager, which means you're managing the management company to give you all those things that I just described.
Thank you so much, Arleen. And
really quick, Shirley. Really quick.
Go ahead.
All right, guys, who wants to start a property management company?
You can do it. So Arleen, I mean, so much goodness in what you're talking about tonight, but one of the biggest things that I kind of took away right now is your why, right? It's the purpose, is relaying that to your team so you can get that buy-in for everybody to work together for a common goal. So that is wonderful. Now, with that being said, with all the minutia in between of, getting everybody together, what is some of your strategies for finding a good deal and finding a good property for your investors?
I think I've had people ask me, do you direct mail owners? How do you find these properties? And in the beginning, we tried some of that. It was mildly successful, but my recommendation is establish relationships with brokers. They know about all the properties that either are coming on the market or soon to come on the market. And so that broker is really key to that. And find the markets that you're interested in, and go look online for properties that are for sale through JLL or CBRE or Berkadia, Cushman Wakefield, all the big ones, and go on there and look. because when you fill that out, you get on their email list. Then now all of a sudden you're receiving those emails about the properties that come on the market. And guess what every one of those emails has? The name of every single broker in that office. And in the beginning, when we started, that top broker, that senior director, they weren't going to answer our call more than likely, right? So we went with the hungry guy, our gal, that was maybe a, beginning associate or, a junior associate, because they were hungry and they were happy that somebody was calling them to find about these properties. And guess what? Those folks today are now the senior directors. So that relationship that we started a long time ago has paid dividends into the future. And these are folks that when they have babies, we send them baby gifts. We send them a Christmas gift every year. They've invited us to their kids' birthday parties. So, and sadly, they make us aware when they lose a family member, and we send flowers to the service. So they become like another part of your family, or you should look at it that way, because I'll give you an example. We went to a dinner with a group of brokers in Houston, and we started the dinner by asking them about their families. We wanted to know who they were. And one of the brokers said, nobody has ever asked about my family first. They've always asked about business. And I learned that when I was in international private banking. I managed a portfolio. And I remember that the clients that would come in from Mexico, Sudamerica, wherever, they kiss you on the cheek, which made the other the other lenders in the department go, what is she doing? I'm like, you got to understand the Hispanic culture. This is how we do things. But anyway, they said always, you're trained in business schools to get right to the point, to talk business. But when you're forming a relationship, any relationship, you don't start with the business. You start with the personal. Get to know that person.
Yes, no, I mean, absolutely. And that's what real humans want, a personal relationship. We have to start getting away from the transactional aspect of the business and just build that family. I mean, it just seems like you have a family now. You don't even have to worry about it. It's like a snowball effect of information and leads that are coming to you without you even having to work that much, just because you foster those relationships. And so I have another question for you. So for a lot of us here, we're young, we're ambitious, we want to get after it, we want to start building a legacy. And so tell us what's possible with real estate investing. Give us the numbers.
Oh my gosh, you set your goal and it's possible. So there are key pieces to that, right? And that's the capital. You have to start with where are you going to get the capital for that deal? You'll find them. Don't worry about finding the deals. You will get them. But it's what do you do once you have the deal? And lenders, just like I talked about brokers, you need to start establishing those relationships with lenders also. They'll bring 65 to 80% of the dollars needed to close that transaction. They're a huge piece of it. And so, be loyal to those that bring you to the dance, as they say, right? If a lender treats you well or a broker treats you well, but in this case, we're talking lenders, give them repeat business. And the way that's benefited us is when we look at a deal, we can get it underwritten by a lender in less than a day. So we know what they are going to lend on that deal, and it either moves that deal forward or it kills it right there, right? Because they have their own set of numbers. And so the lenders are huge. They know our expenses, our expense profile for our portfolio. So when we submit a pro forma budget, it's backed up by the years and years of them having lent to us and them seeing the financials from all of our properties in our portfolio. So there's a lot of value in getting to know lenders. And most lenders are nationwide, so they don't have to be a lender in Florida if that's where you're buying a property. It can be a lender in Dallas, Texas, lending you the money for that property in Florida. So again, get to know them. Try to really build those solid relationships even before you have a property. And investors, start building that database of investors. It's amazing to me when you start telling people what you're doing, they'll start asking you questions. Well, how are you going to do it? And how do I be, once they get excited, they'll ask how they can be a part of it. So those are two big sources of capital to fund your deals. And so make your list. It doesn't matter if they're a far off relative or a coworker or whoever it may be, start to have those conversations. I think this podcast is phenomenal, right? Look at everybody on here that has the same interest. Everybody's trying to help each other grow financially and learn along the way. So great group here.
That's amazing. That's amazing. We appreciate the gold nuggets. We're going to go ahead and turn it over to the chat really quick. They have some questions from Juan Valencia. What are the most common challenges you face in managing a multifamily property, and how do you address them? Is the first question.
Sure. If you're going to try to manage your own property, I say one of your biggest challenges is understanding what that property needs, right? So building your rehab plan is key in the beginning, and then figuring out how are you going to staff it. If you don't have a third-party company that you're hiring, you need to understand the basic of you need a manager or you need a leasing agent or somebody that's going to fill the holes of what you're not going to do on that property. So the biggest challenge is figuring out who do you need on that team to make it successful. The other piece I will tell you is get educated on asset management. And what does that entail? For me, I was certified by the National Apartment Association. Your local apartment associations have some awesome training. A lot of it free or very, very low cost. And it's a great place to network with other owners and other service providers like vendors and people like that. So we joined the apartment association here in San Antonio when we first bought our first property. And then we got certified as apartment managers and portfolio supervisors. So through that process, there was a lot of knowledge about risk management, right? That's the big scary thing. How do I make sure I don't have something terrible happen on my property? Well, you're going to have insurance for it. You just need to make sure you have the right insurance, right? So, so a third-party company can provide a lot of that if you hire one. It might be a great place to start because then you're not having to learn it all from scratch. You're kind of learning from them. And so that might be a good place to really start. And then if you decide to do it all on your own, figure out how much time do you have to run that property. And if you're not personally going to run it, who are you going to bring in to do it? Because a property can decline in 30 to 60 days and getting it back up is going to take you 3 to 6 months. So keeping your eye on the ball is super, super important.
That was amazing. Actually, I'm glad you said that. I'm gonna look into some of the local trainings here in Dallas to do some kind of asset management because I am in construction, and I'm very familiar with the interior finish outs, exterior, and all the CapEx budgets. That's what I do for a living.
Yeah.
So now that you said there's actually local classes in your markets, most definitely gonna look into that. So thank you. I didn't even know that, but we'll look into that. And we're gonna go ahead. We got some hands that are being raised. Let's attack those really quick. Guys, remember, this is for you. This is for you to come out here and to learn from Arleen. So if you have any questions, guys, get in the chat or raise your hand and get on stage. We're gonna go with Gabrielle Walker. Welcome.
Hey, Eileen, thank you so much for coming out. I appreciate these Tuesdays. I have like a question. Earlier, you say that know what you bring to the table. When you knew, how do you know what you bring to the table, and how should you evaluate what you bring?
Well, tell me what you have done. What kinds of jobs have you done or had?
I'm a nurse practitioner.
Okay. So, as a nurse practitioner, do you have to be organized?
Oh, yeah.
So you bring organizational skills.
Okay.
So that's what I meant by creating your real estate resume. It's not like your
Okay.
traditional resume where you're going to put, I'm a nurse practitioner. Yes, you want to put that on there because that's
Okay.
your career path. But what is it about being a nurse practitioner that has helped you, or that you can share some of your skills, like being organized, being able to understand customer service, right? Some of
Yes.
those things are key. So you can bring all of those to a partnership to say, this is what I'm good at. You know, are you good with numbers? You know, do you have a big network? In your case, are there other nurse practitioners that you know that you can build a nice database to raise capital for a deal? So it's kind of going outside of the normal realm of thinking, well, I haven't done real estate before. What can I really bring? Well, we already identified some things that you can bring to the table just in a couple of minutes. So I would ask and challenge everybody to do the same thing. Look at what you're doing today or what you've done in the past. How much of that can translate into another business, in this case, a real estate business?
Thank you. Thank you very much.
You're welcome.
That was a great question, guys. By the way, Gabriel, thank you for asking that. I think a lot of people can't really, digest, well, what am I great at? You know, this is my profession, but what am I actually great at internally? So thank you, Gabriel. That was an amazing question. Let's turn it over. We'll go to Luis, our good friend Luis, and then my friend Gloria from the chat, and then we'll go back to Alejandro. So Luis, if you want to go ahead and ask your question. You're muted, brother. Let me unmute you. Let me see.
Can you hear me?
There you go. Yeah.
Hey, Arleen. Thanks for being in here and teach us what we need to know for the future. We are all fresh to start, you know. We are here hungry to know what you know, you know. We still got a long ways to learn. But I have a little question. There is a lot of people that say that you need money, or you need a lot of connections to buy commercial real estate, but nobody tells you the secret, you know, what you can do and what you cannot do. So I've been hearing a lot about the master lease agreements, where you can basically deal directly to the seller, and you can have just a little bit of down payment and go with the master lease for 5, 10, or 15 years. What do you think about that? Is there any risk of losing the property using this method of master lease agreement? Have you ever worked with that?
Unfortunately, no, I have not worked with that in the past. Wish I could help answer that question, but what do you do as your profession?
I'm a contractor, Class A contractor.
You're a Class A contractor. So you're very valuable in this space because you know what it costs to rehab a building, right? So although I don't know anything about the master lease piece of it, I will tell you, look at everybody on this call. Where can you connect with somebody that can bring the capital? I think that's always everybody's first obstacle is money, right? How do I buy a property if I don't have money? Well, I didn't buy all these properties myself either. As I mentioned, we have 900 investors. So I'm a syndicator, which just means I'm kind of the lead person, but I bring a lot of people in with me to invest. So if you think through that process, there are a lot of deals out there, but you have to fund them. So start expanding your network to look at when you go to do a job, would the owner of that building be willing to invest with you, knowing that you did a good job on their job, right? So start expanding your network, relationships. And if somebody else knows about master lease, please respond, but I've never done it, so sorry.
It's okay. It's not a method that a whole lot of people uses, and it's very valuable. It's really good, and I'm getting as much information online. But I thought to ask the question because you are professional on this business, and we are just starting. So
Sure.
I thought to ask the question.
Yeah, and I will tell you, I was in your spot in 2017. I didn't know one thing about this business because I'd never done it. But going online, looking for resources, joining groups like this group that you're part of today on this podcast is an excellent way to learn on how the different pieces. So I will just tell you, if you were to find one of those deals through the master lease process, the question I would ask you is, who's going to run it?
That's my question too.
Yeah.
Because I have two deals that I am talking to the sellers and the brokers of the properties. And one of the deals is really good, and I'm trying to get it. I know I cannot bring investors with me because I have no track record. Nobody knows me. And I understand nobody wants to, put the money at risk. I'm an exchange, but I'm trying to do it myself through the master lease agreement. And I already mentioned that to the broker, and he said, well, the owners are old. They've been the owners on that property since, I think, 1940. And the father gave it to the son, and the son now is retiring. He doesn't want to deal with the property anymore. He's like 70 years old. So they just want to get rid of the property. It is a Class C building, and it's got a lot of potential. It's close to like 3 or 4 military bases. The property, the next apartment complex is like 3 or 4 miles away, but the rents in that area are almost 3 times as the one I'm looking at. The one I'm looking at, it's the lowest ones are up to from 470 to I think 800 is the expensive one. And because there is people that they've been living on that property for like 30 to 40 years. They never sign a new contract. They just pay month to month, and the owners, they just charge them whatever they feel like to pay because they
Yeah, I mean, the numbers you're sharing sound really awesome. What I would tell you is this group right here probably has people with some management experience and underwriting experience, right? That can take all that data you're talking about and plug it into an underwriting model to make sure where those numbers are going to lead you. Because if you're going to bring any investors with any money, they're going to want to know, what are my returns? How can I expect my money to grow? How is it going to grow? So I would say reach out to folks in this group or other folks that have that experience. Bring them in as part of a team. And in the beginning, that's the best way to start, is to partner with people. But partner with people that have different skills. You've got the construction skills, right? You understand what it costs to rehab that property. Somebody else may understand what's it going to take to manage that property. And then somebody else is going to understand, how do I underwrite? How do I put all those numbers together to make sure what the numbers mean in terms of returns for potential investors? And there may be folks that are willing to invest with you, but those pieces need to get put together. And I think there's folks on this group that may be willing to partner with you.
Thank you, Arleen. And let's keep it short, guys, because we know that Arleen, her time is too short in this meeting. So we're gonna go for a last question with Alejandro, and then we will let you, Arleen, to share your. You have something really awesome coming up from your group, so we will let you go after Alejandro asks your question, right? So let's go, Alejandro.
Hi, Arleen. Thank you for your time. I'm your neighbor here in San Antonio and really appreciate your knowledge. I wanted to ask for your perspective on where the market is headed here in Texas in the next few months. Do you see a lot of opportunities coming? Where do you see the interest, the rates going, and just the whole environment?
Sure. And I'm going to share things that I've been reading and hearing and experiencing in this market. So we are still doing deals. We're closing on a deal in Austin in 2 days. We just put under contract a 2-property portfolio here in San Antonio. Awesome returns, awesome numbers, but that all comes from relationships. And the brokers, for example, said, the seller asked me to bring the top 5 buyers because certainty of closing is the number one thing for a seller. They don't want to put it on the market. That buyer can't close, and then they have to put it back on the market, right? It sends the wrong signal. So the relationship with that broker right now and others is making sense because we're still seeing a lot of deals. I think we've underwritten just between this week and last week about 20 deals. And they don't all make sense, right? Because what we're seeing is there's a gap between what a seller thinks their property's worth and what a buyer's willing to pay in today's market, because your cost of that debt with interest rates going up just went up. And it's a huge part of your expense load is that debt service. So understanding what that looks like and is important. And that's why we go to our lender and say, underwrite this for me before I even make an offer. Because that we know when we submit an offer, we can get a loan on that property and how much and the interest rate, everything itself. On the loan side and how interest rates are affecting it, it's just kind of watching the last 2-3 years. Fannie Mae and Freddie Mac were the primary agency lenders. The government lenders were kind of the number one thing when we first started. And then it moved into what they call debt funds or bridge lenders that give you a shorter term loan, 3 years plus 2 one-year extensions. They came into the market because Fannie Mae and Freddie Mac have a certain dollar amount they can lend annually. And once they exceed that, they can't make any more loans. So these other lenders came in and said, oh, we can fill that gap. But they were lending at a higher leverage. For example, Fannie Mae, Freddie Mac, maybe they were doing 70 to 75. These other lenders were offering 85, 90% leverage. Well, even though that sounds good, it may not be good for the property to take on that much debt. So fast forward to today, all of those debt funds, they're too expensive to borrow from today. They're, 8, 9% interest rates to borrow from them. So now Fannie Mae and Freddie Mac, those same government lenders, are back in the picture. And we just locked a rate on a loan for the one we're closing at 4.85% fixed. So, but a lot of that comes from building those relationships. So what I see in Texas, we have huge in-migration from all over the country. So Texas is projected to grow by a lot. We buy in the Texas Triangle, Dallas, Fort Worth, Houston, San Antonio, Austin. Everything in that triangle is where we typically buy. Now, there are properties in South Texas that make sense. There are properties in El Paso that make sense, but we've kind of concentrated where we buy. But I'll say that the markets we're buying in have a lot of job growth. They have a lot of population growth. And we're still seeing rent growth. you probably hear in the news that rents aren't growing or they're not growing as fast. Well, our portfolio rents are still 12 to 15% rent growth. So yes, there is growth, but you have to study those markets individually and study the 1 to 5 miles around the property you're looking to buy. What have rents done there? What kinds of jobs are there? What kind of incomes do people make? And can they afford your new rents? If you're planning to raise rents by $150 to $200, can that same group of people in that area afford those rents? If not, then that may not be a good property, or that may not be the ideal market for you. So even though things are, a little bit different than they were even a year ago, there's some awesome opportunities. We bought on the last half of last year, 5 properties, even when rates were already rising, but you underwrite for them. We build in those rate increases into our underwriting and make it make sense. And we got deals, and we got properties 2 million below where that broker originally said they were selling at, right? So in some cases more. So it's really understanding the market that makes the big difference. But I see lots of opportunity, at least in our markets in Texas.
Thank you, Arleen, so much. So I will let you to take the lead right now, because you guys, as a REEP equity group, you guys have really interesting event coming. So you guys feel free to take the lead anytime. You want to share your screen, you can do it. So, but thanks again, guys, for you, Arleen. And I know that we have a couple more questions here in the chat, but the time is really short. So we kind of give this the end of this meeting to Arleen. So just go ahead, Arleen, all yours.
Thank you so much. We have an exciting event coming at the end of May here in San Antonio. And really the whole focus of this event is to educate people on what it means to invest in multifamily real estate. So we want to show people how to take control of their financial future through investing in real estate, how to create real wealth as a passive investor, and how to generate passive income. What we're going to do on Saturday, the 20th, is have a group of speakers that are going to talk about the tax benefits. How do you take advantage of those by investing in real estate? How do properties make money? So even if you're looking to buy your own property in the future or be a syndicator, you're going to learn how we do it. What are the formulas that we've learned over the last 11 years that help create more success when you're buying a property or you're investing passively? So we'll go through all of that. We're also going to have Ed Milet as our keynote speaker.
Wow.
He's one of the top speakers in the US, and he's going to talk about mindset. If we all say, I can't do it because I don't have money, I don't have experience, I don't have whatever it is, guess what? In a year, you're not going to do it. But if you really work on your mindset and say, how can I do it? All of this is possible, and I'm living proof. And then we're going to have a really cool dinner at the Alamo. We rented the Alamo for our guests for our conference, so they can also experience some of the culture of San Antonio. And then on Sunday, we're going to have people get on buses, and we're going to take them to properties that we own, where we already bought them, implemented a rehab plan, and those properties have higher income. So we're going to show you on Saturday how to do it. And then Sunday, we're going to show you what it physically looks like to renovate a property and have that property become successful. So really in 2 days, it's action-packed. But if you're new to real estate, this is going to be a really good way to learn our formulas, our secret sauce on how we do it.
Thank you so much, Arleen. And you guys listen this. So if you have any more questions about this event, where can people find it, Arleen? Should you just go to the website, or how can they find more information about this event?
Yes, they can go to peoplesinvestorexperience.com, which is at the bottom of the slide that you're seeing. And that will give you a place to fill in your information and buy a ticket if you're interested, or ask a question. So that's a great place to go. We're so excited about this because our goal is for this to be for ordinary people to be able to invest. This isn't just about the rich getting richer. We want to help our cousins, our uncles, our aunts, our neighbor next door, the fireman, the teacher, all of these folks invest with us, and we're so excited to help them grow their wealth.
That's amazing, guys. Once again, everybody, we can put some fire, some claps in the chat for Arleen Garza for coming out here tonight and spending the night with us. And we will see you, everybody, at the People's Investor Experience. Now that I know that it will be held in San Antonio, which is a couple hours from me, I will be there. So for everybody that will be there, we will see you there. And Arleen, once again, thank you so much for your time.
Gracias a ustedes por invitarme. Los saludo a todos en el Zoom, en el chat, y nos vemos en San Antonio pronto. Good night,
Yeah.
everybody.
Buenas
Thank you
noches,
so
buenas noches.
much.
Gracias.